Welcome to the Sound Property Cashflow Calculator tutorial. This powerful tool for residential property investors is designed to give an understanding of the relationship between the income and the expenses of an investment property in the first year of ownership. It's broken down into 4 simple steps, the first being purchase costs, the second being the income and the expenses of the property, the third being the tax factors that are associated with the property, and the fourth being the cash flow estimates, broken down into a weekly and annual amounts. If a user needs help throughout the calculator, they simply need to hover over the help fields marked by the question marks to get help on either the line items or the different steps. So we're going to go ahead and put in an example property and work through the different features and functions of the calculator. So I put in an example here of a property worth $500,000. We then need to select our deposit and whether that's coming from equity in another property or we're using cash. We can choose the deposit amount as a percentage or as a dollar figure. We then need to enter in the suburb that we are looking to purchase. It will then generate the stamp duty based on the purchase price and the state that you are purchasing in. Then we have some other purchase costs such as legal fees or pre-purchase costs such as pest and building inspections, surveying costs, buyer's agency fees, any other costs that are associated with the purchase of the property. So in this example, our purchase cost with a 20% deposit is sitting around $120,000. The next step is to move on to the income and expenses of the property. This is where we can put in the weekly rental income. In this example, I've used $450 a week. It then generates that to be $23,000 as an annual figure, and also it works out to be a 4.7% rental yield, or simply the rent as a percentage of the purchase price. Then we need to go through and enter in our annual expenses that are associated with the property. And this is definitely not a definitive list, but just some of the main expenses that you will be incurring as the owner of an investment property. The first one being council rates, insurance or strata fees if you are buying into a unit block, other expenses, so this might be water rates, maintenance, cleaning, anything else that you'd like to put in that would be an annual expense for the property. The vacancy period here allows for any vacant time that there's not a tenant obviously paying rent in the property, and so this will deduct whatever the weekly rental amount is that we have put into the calculator. The next one is the management fee. This is the property management fee. Generally, property managers in Australia charge between 6 and 7%. So in this example, I've just used 7% plus GST. So we can see our total expenses are sitting around $7,000 a year for this property. The other big expense is obviously interest on the loan. In this example, it has calculated a loan amount of $400,000, which is a loan to value ratio of 80%. Because our loan to value ratio is 80% or less, we don't pay any lender's mortgage insurance. If you'd like further information about mortgage insurance, please hover over the help field. Then we need to select what type of loan that we are applying for. Is it a principal and interest loan where we're actually paying the loan down over time, or is it an interest-only loan where we're just paying the interest portion back? So in this example, I'm going to choose principal and interest. I'm going to select a 30-year loan term, and I'm going to select an interest rate there of 5%. So that then we can see the breakdown of our interest repayments. The interest portion is nearly $20,000. The principal portion is nearly $6,000, totaling the expenses now are totaling $32,000. Then we move on to the tax factors for the property. This is where you can put in your individual gross income, so before tax. In this example, I've just put in $100,000, which puts the user on a tax rate of 37%. We can then calculate the depreciation, which is another tax deduction that is applicable for investment properties. And then we just some simple questions here around the property, when it was purchased, if it was bought secondhand or brand new, what type of property it is, house, unit, etc. Nearest capital city, the year that it was built or the construction year, and the standard of finish. And if you're after a description of some of these standards of finish, you can see again hover over the help fields. So in this example, with all these parameters entered in, it's looking like we can claim about $10,000 in the first year of ownership as a depreciation tax deduction. So then we move on to our final step, which is the cash flow estimates. And we can see here that we have some weekly and annual amounts. So just looking on the annual figure for a second, if we look in the pre-tax cash flow tab, our annual cash flow is simply the rental income minus our annual expenses, which totals nearly $10,000 shortfall in this particular example. Then we can have a look at our post-tax cash flow and how that might look based on this property in isolation to any other assets, and also that tax rate that was entered in. Again, just a bit of a side note here, we'd always recommend that you have a chat to your accountant to get a holistic look at how your post-tax cash flow might look, because it is a lot more complex than this calculator will portray. But this gives you just a quick look based in isolation at this particular property based on that income that you had put in. And it's broken down like this. The rental income comes in and now expenses go out. So we've got our annual expenses, we've got the depreciation, and so we have a net taxable amount of $13,000 loss on this particular example. So we're entitled to our tax rebate back at our marginal tax rate, which in this example was 37%, which ends up being just over $5,000. When we add that to our pre-tax cash flow, we can see that the property then sits at just under $5,000 a year shortfall to own this particular property. If you want that broken down weekly, you can click over to the weekly tab and see how that might look on a weekly basis. So we're looking at about $85 a week to hold this particular property. If you need help or understanding how this cash flow works, please feel free to put in your phone number here, and one of our team will be in contact shortly to walk you through that cash flow results for your data entered. Finally, at the bottom is an equity growth table. And this is where you can enter in a selected capital growth rate. In this example, I have 6%. And we can see over a 10-year period what change or what compounding effect that growth rate might have on the value of the property over a 10-year period. We can also see what's happening to the loan. Obviously, in this example, we've selected principal and interest. So the loan is diminishing over that 10-year period. And then finally, we can see what the total equity is. And this is basically what's left after the property value. The loan is subtracted off the property value. And over a 10-year period, obviously, we can see this growing in its amount. So that's a quick overview of the Sound Property Cashflow Calculator. I hope you found this tutorial useful. If you do have any other questions or would like help to understand the numbers, please reach out to one of our team and they'll be in touch shortly to walk you through your numbers.